With the deep correction of global equities last year, the reported performances of private equity or PE funds were affected as well. This was due to 1. Downward revision in the valuations of portfolio companies to reflect prevailing market values, and 2. The reduction in distributions to investors as realized investment gains fell significantly given the down market with much fewer sales transactions. The weak performance was pronounced at the extreme ends of the private equity market, which are venture capital that involves early-stage companies and buyouts that target more mature companies. As we approach peak interest rates and slower growth, what is the state of the market and what can investors expect? The recovery of equity markets in 2023, especially developed markets, has been fast and furious, despite the wobbles around the US banking crisis and volatile interest rates expectations. Private equity had underperformed public equities in the near term. Valuations for PE-backed companies are not back at levels where founders and GPs find it attractive to sell, while investors are much more selective and continue to demand lower valuations. For now, the exit and operating environment for PE fund managers remain difficult, evidenced by the fact that only the best portfolio companies are coming out to market and the overall volume of transactions remain low. Investors have been cautious in allocating into PE amidst the current regime of higher interest rates. But we also see several reasons why private equity is attractive today as an important core holdings of long-term portfolios. Portfolio companies and PE fund managers have responded to the higher rates environment by cutting costs aggressively to reduce cash burn, putting their portfolio companies at a better footing today. Valuations of private equity holdings are less stretched compared to many parts of the public markets at the moment. Private equity is an effective way to diversify from concentrated exposures in global equities and access the majority of investable companies which are outside the public markets. Lastly, investing after a period of large corrections in the markets have historically generated some of the better performing vintages in private markets. Thank you, and stay tuned for our next episode of Conversation on Alternatives. My name is Bileng, and this is Bank of Singapore Research.